Looking for double-digit returns, 10 baggers that are going to multiply your money overnight? I'm going to show you why the best investment returns trap you into being poor and the most important thing to remember when you're investing. By the end of this video, you'll have an exact amount that you need to reach your investing goals. You'll know exactly what it's going to take to get you there, and you'll be on your way to a custom investing strategy designed just for you. We're talking an investment plan for your goals today on Let's Talk Money. Beat debt, make money, make your money work for you, creating the financial future you deserve. Let's Talk Money. Joseph Hogue with the Let's Talk Money channel here on YouTube. I want to send a special shout out to everyone in the community. Thank you for taking a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Now, if you watched our last video on Wall Street Lies, you know that there are myths that the industry has used to blind investors, cause them to lose money, and then trap them into depending on the pundits, the analysts, and the brokers for advice. Well, today's video is about a trap that investors have set all by themselves, one that loses even more money and keeps you poor. It's the myth that you need to be chasing the best investment returns, buying low and selling high and just beating the market. It's a lie investors have chased all their own, blindly chasing higher returns with no plan, and there are really two problems here. First is that it's chasing those high investment returns that leads to those bad investing decisions. Investors jump at the thought of doubling their money in a penny stock without even thinking about the risks in those stocks. They trade in and out of the hot stock tips they hear on TV and lose thousands in fees besides the money that they lose on the investments. Second, though, and maybe more important, is that even the best investment returns are going to be pointless without a plan. A goal without a plan is just a wish. I love that quote by Anton Saint-Exupéry. Simple but powerful. We all have things that we want in life. Call them goals, fantasies, a bucket list, or whatever you want to call them, but so few people actually make a plan to reach their goals. It's that way with investing too. Most investors have some vague idea of retirement or an arbitrary goal amount that they need, but they have no plan to get there. They only have a wish. Too many investors jump right into stocks, hoping to catch that next hot stock and get rich. The problem is that even if they hit that triple-digit payday, they just keep on chasing high-risk stocks until, like a degenerate gambler, they give back all their profits. They won't stop. They can't stop because they don't know when to stop. They don't have a plan, and they don't know how much money they need to reach their financial goals. So instead of staying on that hamster wheel, instead of chasing those higher returns, I'm going to show you how to create a plan and know exactly the return you need to reach your goals. I'm going to show you how to find your magic number in retirement, the return that you need to get there, and how to match that up with a portfolio that offers the return you need at the lowest risk possible. So understanding the importance of a plan, I like to use a road trip analogy. Now, let's say you want to drive cross country to LA. You know your car can get there, so you just jump in and start driving. But you have no idea how to get there. Without planning your trip, you're just going to drive aimlessly until you run out of gas. In meeting your financial goals and in road trips, you better know how to get to your destination, or you're going to be taking the bus back home. You can chase stocks all day. You might even get some excellent investment returns in the meantime, but none of it is going to matter. You're eventually going to run out of gas and fail to reach your goals. Having a plan, though, having that roadmap to your investments is going to do something very important. It's going to show you exactly the return you need to reach your goals. You'll be able to customize an investing strategy exactly with that return and as little risk as possible. That's going to smooth out your portfolio. You won't see those huge swings in a stock market crash, and you won't make those investing mistakes like panic selling. Now, that's also going to give you the confidence in your portfolio to just let it grow over time. Now, in our last video, which I'll link to in the description below if you didn't catch it, in that video we talked about creating that mental picture around your perfect financial goal. From there, it's actually pretty easy to find the amount that you need to save for your retirement or really any financial goal, and it's so much more effective than the current thinking in finding your retirement number. You see, most people find their target retirement savings by just looking at their current expenses. They take how much they're spending, maybe shave off a bit, and use that figure for how much they'll need to pay the bills. But what you're spending now may have nothing to do with your perfect retirement, nothing to do with that mental picture you created. In that mental picture of your goals, you might be living in a totally different place. You might be traveling more or enjoying different things. You need to be planning for how much this costs, not your current expenses. So here's what we're going to do. Take that mental picture you created and list out everything you're doing on a daily or weekly or even a monthly basis. We're talking a whole what does retirement look like for you list. Are you traveling more and to where? What are the things that you always wanted to do but couldn't find the time to do them? Are you renting, buying, or puttering around the country in an RV? Answering all these questions is going to give you that rock solid idea of your expenses in retirement. Working from this instead of some guesstimate is going to start your customized investing strategy with facts instead of rules of thumb. Now you just take that monthly amount that you need to do all this and multiply it by 25. That's going to give you a portfolio amount where you can take 4% out each year. That's about how much advisors say you can take out and not worry about running out of money in retirement. So for example, if you find you need $4,500 a month to pay for your perfect retirement, that means times 12 for an annual amount of about $54,000, then times 25 for a portfolio of about $1.35 million to pay for it all. And before the comments start coming in on this, we aren't going to talk about Social Security here because I don't want you depending on it for your dream retirement. It's a judgment call though, right? The average Social Security benefit is just over $1,300 a month. Now you can take that off the amount that you plan on needing for expenses, or you can plan without it. So for example, if you plan on needing that $4,500 a month, but take out $2,600 for Social Security for you and a spouse, that means you still need $1,900 a month, or just under $23,000 from your investments. Times that number by 25 means that you'll need a portfolio of about $575,000 to pay for it all. I know this is a lot of numbers to throw at you, but nobody said planning 30 years or more of your life would be easy. Take just a little time here to do this right though. Be sure on exactly how much you'll need in retirement to be happy, and find out what kind of a nest egg is going to make that happen. So now you know how much you need for that retirement of your dreams. The only thing left is to find out what kind of return you need to get you there. For this, I've got an easy retirement investing calculator on the blog, mystockmarketbasics.com. And I'll link to that in the video description below. But what I love about this calculator is because it's so easy and you can really play with it to fine-tune your numbers. You're going to fill in a few blanks here on how much you've already saved, the savings goal that you found from above, and how much you can save each month, and then how many years you have left to save. With all this, then you're going to play around with that investment return that gets you to where you want to be with the lowest possible return. For example here, if I want that $1 million within 30 years, we'll say I have $65,000 saved and can save an additional $500 each month. Now if I estimate 8% return on my investments and click calculate, so the calculator tells me that with that rate of return and those examples, I'll have just over $1.3 million saved in 30 years, which is more than I actually needed. So I can come back up here and lower this return estimate. Try 7% here and then click calculate. And here it says I can get a 7% return and still have just over $1 million by that time I retire. It even shows me that $3,500 a month income from that 4% estimate on the investment value. Now, as you're playing around with these numbers, don't get too aggressive on the investment return. I wouldn't plan on making more than maybe 7 or 8% on your investments. And really you want to find that the numbers come out when you're around 6 or 7% because that's a little bit more realistic for a retirement portfolio. Now why this is all important is because it's going to help you pick those investments you need to reach that investment return. With that 7% annual return needed, I know I don't need all of my money in stocks to meet my goals. I can put some of the money in safer bonds and diversify some of it in real estate to get that smoother portfolio growth. You'll worry less about your investments, you'll lose less money in a stock market crash, and you just won't make all those worst investing decisions that ruin people's dreams. Now we'll look at how to find that perfect mix of stocks, bonds, and real estate in our next video, so make sure you subscribe and click that bell notification so you don't miss it. Click on the video to the right here where I'll reveal the lies Wall Street tells investors and how to create that mental picture around your goal.